and welcome. We are so excited to have you here. Thank you for joining our webinar today on getting ROI from your software investment strategy. My name is Majhon Phillips. I am a team lead of professional services here in the North American market for UpSlide. I'll be moderating today, and we are just so excited to host you. So just as a heads up to everyone, our webinar today is going to be 45 minutes. We strongly encourage you to use the Q&A below for questions that might pop into your mind as we go. This is going to be an interactive session as well, so please respond with any of your insights and viewpoints during our polls. We'll also be saving about 5 minutes at the end to go over some of your questions with the panel. As a reminder, the webinar and all of our other materials can be accessed on demand. And by registering, you'll also receive an email within the next 24 hours with a link to cool information as well as the recording of this webinar for future access. So, question a lot of us are probably asking is, why are we here? Why did we show up this morning? Well, UpSlide and Williams Lea recently completed a report on investment banking software challenges, trends, and strategies for 2024. We've learned through this report that many investment banking firms are at a pivotal juncture in juggling budget cuts along with trying to identify squandered budgets due to redundant and underutilized tech stack. That said, IT leadership remains unanimously committed to investing in new software solutions over the next 12 months. Which software solutions will ultimately provide the most value? What criteria should you be evaluating in vendors? And how can you accurately measure the ROI when you do make that final purchase? So our report found 5 pretty strong key takeaways. One is that software budget cuts and inefficiencies are affecting business performance, with over 2/3 of companies reporting a budget of $1 to $5 million US, and they're wasting at least 500,000 of it each year. Software investments aren't slowing down though. Even with those reduced budgets, 100% of our respondents are investing in new software solutions over the next 12 months, which is pretty exciting. Document automation and management is the top investment priority, with 39% of our respondents saying they are currently investing or will invest in document automation and management over the next 12 months. Investment banks tend to be moving away from building their software in-house, and surprisingly, in-house solutions are no longer overwhelmingly preferred choice among investment banks. 57% of our respondents are buying half or more of their tech stack instead of building it in-house. Effective adoption and change management are key for generating software value. So over 2/3 of our respondents aren't currently implementing any change management or training initiatives to improve the utilization of their software. This seems to be the biggest driver behind that budget waste that we were talking about. But from what we're seeing, there's not a huge push to resolve it. So we're going to be discussing all of this today with some of the greatest thought leaders in the IT space within investment banking. And if you're curious to learn more about this report, you can access it along with other topical resources in the related content section of your screen. So then, without further ado, I would like to introduce our IT space geniuses here. First off, I'm going to introduce my co-presenter, Ed Rasmussen, is the Global Executive Vice President at Williams Lea, working directly with financial services and client services, and is based here in New York. Hi, Ed.
Hello, it's a pleasure to be here.
Next, we have Christina. Maddy is an executive director at Nomura, working in investment banking digital innovation. She works with bankers to understand their biggest technology pain points, and in the Nomura corporate function and IT tech teams to strategize and bridge the gaps. She's also based here in New York. Hi, Christina. And then we also have Ian Clark, who is the global CTO at Lazard, responsible for technology for the investment bank, also based in New York. Hi, Ian.
Hi, good morning.
All right, so what are we going to cover today? Well, we were broken into 5 main buckets. One is going to be the challenges that investment banking are having with software deployment, initiatives that they're using to prevent those underutilized tools in their tech stack, how to ensure that you're working with the right vendor whenever you are trying to make those purchases. Once you've made the purchase, how you measure ROI on that spend, and then some time for Q&A as well. All right, so let's hop right into some of the challenges that we're seeing in that software deployment. So my first question is going to be for you, Ian. we're working in somewhat challenging times really at the moment. There's a lot of economic, macro social uncertainties that have led to software budget cuts across the investment banking industry. But the real challenge that surfaced throughout our survey results was that 68% of investment banks are wasting at least a quarter of remaining budget on software that's inefficiently deployed. It's not adopted, and it's not fitting the purpose of the purchase. So in your opinion, what's causing this problem and leading to that software being underutilized?
Thank you. So I think that one of the biggest problems that I've come across in my career is IT departments deploying software that's not fit for purpose for the end users. So what I've done in my career, and I think is very important, is really make sure you understand the user base, the firm, what they're trying to achieve, and work with them when developing or purchasing software so that it's actually fit for purpose. Certainly over the last several years, we've been going through digital transformation, and we found there are a lot of pieces of software, both off-the-shelf software and development software, that bankers weren't using because they didn't like it. It wasn't fit for purpose. It didn't meet their needs. So we spent a lot of the time revamping how we actually work and get close to the bankers, really understand what they want to achieve, understand their requirements, and work with them on creating those requirements. So when we deliver a solution, it really is exactly what they need. And so therefore we find that bankers use it a lot more because they were a part of the decision to buy it or build it. It was their requirements. And then we did change management with them and deployed it in a way that they understood it, they were behind it, they were trained on it, and they were getting value from it. And then we go back in the continuous improvement loop, saying, right, it's now deployed. Now you've been using it in the real world. What can we change to make it better, to continue adoption, continue the use of that software? So I think that was missing in a lot of places. So that's why you've got a lot of legacy software that's not fit for purpose that isn't being used.
Yeah, that's really interesting. I'm going to flip over to a poll for the audience, and then I want to talk more about this with you. So poll question to the audience: what do you think has been the biggest impact on software adoption rates? Is it training, change management, or integration? So we'll give you about 30 seconds to focus on that. And then, Ian, as they're answering that question, one of the things that I try to think about is in the scope of a full business, the people making the decisions on software and IT teams are pretty far removed from the bankers. And when they want to understand exactly what the banker's workflow is and what they need and what software is going to be most beneficial, what would be the first step for you, and sort of how would you outline that approach?
So we have a good team of what we call business relationship managers and business analysts, whose job it is to actually be close to the bankers, to understand their workflows, how they're working, and how they want to work, not how they're working today, how they want to work tomorrow. So by having people dedicated to being that kind of relationship between the business and the technology team, so we get a really deep understanding of what they're trying to achieve. And then as we start thinking about a new solution, they are fully involved. We have a steering committee of the actual business people that want the solution. And they're informed every step of the way. So we gather requirements, we walk through the requirements with them in detail, they sign off on the requirements. So everyone's confident that everyone is on the same page on what is actually needed, and then we deliver to those requirements. And our steering committee of IT and bankers is there for the whole process through to deployment to make sure we're actually very much in lockstep with them.
It's fabulous. I love that concept and creating the committee. All right, let's see what our respondents have said as far as this piece goes. All right, so it looks like the majority of people here are saying that the biggest impact is actually the change management piece, which Ian, you were just talking about. I'm going to transfer over to Christina for now and talk a little bit about this piece and how it's working at Nomura as well. So Christina, how does this make you feel? Are you in line with sort of the majority of our respondents here in that change management and effective change management really has like the biggest impact on software adoption?
I think, to be honest, all three areas have a huge impact. On the change management side, I think adoption can be poor if people don't understand why you're rolling out a system, what they're meant to be using it for, and what the benefits are to them. So I completely agree from that perspective that change management does have a huge impact. And if people aren't clear on what they're meant to be using the system for, that can lead to increased support costs and underutilization of features in that system as well. So absolutely agree that it does have a big impact on software adoption. I would say, though, from what I've seen at Nomura, the quality and frequency of training actually has the biggest impact, because you can get that really wrong. From a banker's perspective, I know I'm not going to get them into a room for a training session for 2 hours at a time. It's never going to happen. And I also know that even having a 60-minute WebEx or Teams meeting to go through some training also can not be effective. If people are doing that from their desks, everyone is busy, they're probably multitasking. I'm absolutely guilty of doing that myself. So what we found tends to work really well is when you have an initial training session, look at the top 10% of what you want people to focus on, because that's probably all they're going to take in anyway on that first session. So like Ian, myself and the team, we work really closely with bankers to understand what their biggest pain points are. And we know from the systems and software that we're rolling out what the kind of biggest features are that they're going to get the biggest benefit from. So we tend to try to focus on those first, get them up to speed on that 10%. And then going forward, we could have other training sessions. Half an hour seems to be the sweet spot, but even 15-minute sessions on tips and tricks, short, snappy emails and videos, that seems to be what works well. But we have found that the longer, more intense training sessions, you're just not going to get the people in the room. So we've adapted that, should I say, and we find that the short, snappy approach seems to work a lot better.
I love that. And I think it's so important. You know, we're kind of living in this TikTok culture where people are just wanting like the instant information, and sitting in the long training sessions is challenging. You mentioned that if you sent an invite that you wouldn't get the response, people wouldn't come. I'm guessing it's the same with communications. How do you find the right person to send out the communications that it receives the response and the impact that you need?
So we have an IB Digital Innovation mailbox. Most, if not all, of the tech comms come from us, even the firm-wide comms around infrastructure changes. We try to send it through a consistent channel. We find that works well. For some of the more important announcements, they will come from the international IB COO, but we find that having a consistent communication channel is the thing to do there, and works really well.
Yeah. Fabulous. Thank you so much, Christina. I appreciate that. All right. So with that, we're going to transition to our next sort of topic around solutions and initiatives, and I will go ahead and pass the mic over to Ed.
Great. Thank you. In terms of solutions, over 2/3 of our respondents in the research we performed said they aren't currently implementing any sort of change management or training initiatives to actually improve utilization of the software that they've procured. So, Christina, I'm curious at Nomura, sort of what are initiatives you've put in place to avoid underutilized tools or sort of redundant software?
So when I joined Nomura 10 plus years ago now, I joined in technology as a business analyst, and I moved over to investment banking about 5 years ago now into my current role. But one of the first things that I did, and we've repeated this process, is I set up a day in the life program. So the purpose of this program is really to sit with bankers, understand the day in the life of a banker, the life cycle of a transaction, but down to a real granular level. And the purpose really is to identify the biggest pain points, frustrations, areas for improvement. So we take that information, that forms our book of work, really. So everything we are working on is to resolve, a pain point or an inefficiency. But it's also really helpful to have that information to form your change management program and any training that you're working on as well. So it means that not only bankers, they're getting the value from the training, but it's also we're getting the most out of our tools because we are focusing development on the areas that mean the most to them or that will give them the biggest efficiencies going forward. So that program really, as I say, we the first time we did that was 5 years ago. We're going through the same process again now to really keep ourselves honest, to say, all the changes and new tools and software that we've implemented in the last couple of years, are they working as expected? Are we getting the most out of those features? And is there anything or any areas that we could be focusing on to make them better and align them more with how bankers want to operate on a day-to-day basis.
Fantastic. And same question to you, Ian. Any tips or tricks or initiatives that you're currently instituting at Lazard?
So I think we go back to change management is how we're thinking about it. So to me, change management and training are all part of the same thing. Change management starts with, we do a teaser. So before any big software launch, 3 months before, we'll do a teaser in our comms and get people talking about it and getting excited about it. Then we'll create, as part of it, we'll also create a network of champions, people who are trained in the new solution, so they really understand it, and they're champions within each of the coverage groups who are helping drive the message. And then we use different channels. We use, obviously, email, we use Teams messaging. Often we'll do a desk drop, depending on what it is. And then when we go live, it'll be a big launch, lots of communication. So it's all about change management.
Fantastic. And now I'll hand it back over to Majhon to move into our next topic, working with the right vendor.
Fantastic. All right. So to start off this section, we have another poll for our audience. Question, investment bankers out there, over the past year, did you buy or build the majority of the tech stack that you have implemented? So while you're thinking about that, we were a little surprised about our report findings. There's a new trend that a lot of investment banks, 59% to be exact, have purchased more than half of their tech stack instead of building in-house, which is a change. And it's one that, of course, at UpSlide and as a vendor, we are excited about, but curious to know if the people here, how are you responding to that? All right, give a few more seconds on this. Okay, we'll go ahead and take a look. All right, so it looks like we've got about 2/3 in this group as well, which is pretty clear with our findings also. So Ian, checking this out, obviously ongoing debate about building versus buying, not only in investment banks, but through a lot of the industry. What is your take on it? And when's the right time to build something in-house? And at what point would you want to look externally for software?
Yeah, so this is something I'm very opinionated on, I have to say. We're an investment bank. We're not a software shop. As an investment bank, we shouldn't be investing millions of dollars in building our own software. Our actual software needs are relatively straightforward. A CRM is the main tool of an investment bank. You're not going to build that. You're going to go buy it. So I'm a very big proponent of buy first. I'm a very big proponent of you buy it. SaaS is absolutely our first. And then if you can't buy what you need because it's a true business differentiator, then you build it. So you only build the things that are really, truly different for your business. And we have a couple of instances of those, which obviously I can't go into. But we spent the last 3 years updating our complete stack, and 85% plus of our solutions are SaaS solutions. So, and we've built a very small amount. We've built it cloud native in Azure, but only where it really truly differentiates for us, kind of something we do different or we do unique, then we build it. Otherwise, we'll go SaaS.
That's really interesting. And I'm glad that you're very opinionated about this. It's going to make my next question a little bit easier. So as banks are shifting, why is the shift happening more and more each year? What's changing either in the SaaS marketplace that you're finding or within the banks themselves that's like leading to this wave of people starting to have your same opinion?
There are several things. One of them is the large focus on cost. Over this last several years, obviously, there's been a huge shift to focus on cost across all industries and across all sizes of banks. And building and maintaining your own in-house software is expensive. You need a team to be able to do that. You need a team of developers to develop it, to constantly update it, to keep it secure. When you go over a SaaS solution, you're buying a service. And you haven't got to worry about a big team to feed and water that solution. You just need to buy the service from a third-party vendor. And I think, like I've just said, I think a lot of people are realizing, in the industry we're in, a lot of the software standard and a lot of the providers spend millions of dollars in R&D for these solutions every year to make them better and better for the industry we're in. So they can do it better than anyone can do it in-house because they've got the dollars to spend it. So I think a lot of it comes down to cost and actually keeping up.
Yeah, that makes sense. Thank you, Ian. I appreciate that. Christina, next question for you. So obviously at UpSlide, we're a vendor. We try to figure out how we can help our clients and the people that we work with as best as we can and offer that service that Ian was discussing. So let's say that you're at a point where you've decided to look for a vendor to work with. Walk me through what that process looks like. How do you ensure that you're choosing the right one? What factors are you looking for? How do you make sure that a vendor is going to meet your criteria for that decision making?
So there's quite a few things that I will do when I'm engaging with a new vendor. Normally, it's stemmed from the fact that there is a gap or something that we want to enhance in the business. So I'll have a list of requirements of what I'm trying to solve for, which works as my kind of checklist as I'm talking to different people. But it always starts with some background research. I'll always do my own research first, Gartner's Magic Quadrant, who are the market leaders in a particular area that I'm looking at. But I think the most important thing is when I actually have a vendor come in to present, there's a couple of things I'm looking out for. One is when I engage with a new vendor, I assume that this is going to be a long-term working partnership. So I want to make sure there's a good relationship from the start, really, because I want to be working with people who don't mind me giving them feedback, which I like to do quite a lot, which I'm sure some vendors maybe don't appreciate so much. But I will always give vendors feedback in terms of feedback that I'm getting from bankers, where I think that they could improve their product. It's good for the vendor because hopefully you can then make some changes that benefit a lot of other customers. But selfishly, that's good for me because my end users will get a better experience using the product as well. But there are a few other things, or what I'd call more red flags that I'd look out for. So if a vendor comes in and it's a really pushy sales pitch from the off and I feel like I'm being really pressured into something, that to me isn't a good start for a long-term working relationship. And also one of my pet peeves, given that I work in investment banking, within an investment bank, is when we have vendors come in and pitch to us, but they have no examples of when they've been used in investment banking and it's all global markets or other parts of the bank that they can give examples to. So I'm really looking for kind of tailored pitching, proven track record, examples of working at similar organizations, and really just getting the vibe from the vendor that they understand the challenges and they understand what we're trying to solve for. That's really what I'm looking for when I work with a new vendor.
That's really helpful. Thank you. I mean, there's such a high stake and high bar for investment bankers, so it makes sense that you would want a tool that would match that quality of effort and work. So follow up on that, is there a formal process, criteria, or steering committee involved whenever you are trying to make this decision?
So we do have an IB management committee that we will go to and discuss any new changes that we're looking at. So that happens anyway. But really, I just use my list of requirements as my checklist. So if I'm looking at different vendors to solve for the same issue, obviously things like price come into that, but really we're looking at the features that they actually deliver, and also, as I say, some of those other kind of traits within the company that make me feel that long-term one vendor might be better than the other. So it might be that one vendor provides training and a more full package as part of that solution rather than just an off-the-shelf implementation, for instance. But really, I will just go off of the list of requirements that I have and weigh that up when making that decision.
I love that. I'm hearing a lot from both you and Ian, the importance of really evaluating the partnership, the importance of evaluating the services that are going to be offered to you and taking that lift off of the internal team as much as possible, right? And trying to just make it as easy, customized, seamless into your workflow as possible. Yeah, makes total sense. Next question for Ian.
Sorry, can I just pick on a word you used there? You used the word customized. One of the traps I've seen through my career, a lot of people fall into is buying a piece of software off the shelf and then customizing it so far away from its original purpose that it's now unsupportable. So that's something we're very aware of, that when we choose a solution, it is actually fit for purpose. And we try to not customize it so far away from its original use, because I've seen it many, many times before and it's disastrous. So that's something that a pitfall that we are very careful to avoid.
Okay, I like that. So it's like customize what's necessary, not what's possible, maybe.
Yes, just because you can doesn't mean you should.
Yeah. Okay. Follow up, I guess, to you. We were speaking before the call about how important it is to get like buy-in from businesses and stakeholders from the jump, right? Can you talk a little bit about how you do that and why it's so important to get buy-in from a larger group right from the beginning?
Yeah, if you don't have buy-in from the business at the start, then your project is going to really struggle to be successful. I've seen it too many times where technology teams go and create a project and deliver a solution they think the business is going to love, and the business are like, we don't need this. What's this for? So having that buy-in from the very start, and as I said, we'll create a small committee for each project and work with them to get the requirements. So it's them telling us what they need, not the solution, but what functionality, what use cases, what they need to do, what they want to do, is them telling us. So they've got skin in the game because they're the ones driving the requirements. And they're the ones throughout the project making sure that we're all in line and we stay on point with the requirements. So that buy-in from the very start is key to a really successful project. The other thing we do as well is, as well as the steering committee, we also have champions. So we've created a champions network within the business in different coverage groups. So you've got one person who is part of the project, understands it, and champions the new solution when it goes live.
I love that. And it's the whole story of what you've put together, as far as it's easy to get champions and buy-in if you're actually solving the bankers' problems and not just going after the hot tech of the moment, right? But actually like listening to the real need.
Yeah. And the flip side of that is also bankers will also come and say, we need this tech. And a pitfall that many people fall in is, oh, we'll go and get this tech because the banker needs it. And we're very, very quick to say, hang on, what is it you're trying to achieve? Let us then together decide the best tech, rather than just go and buying tech because a banker's friend is using it at a different company with a different use case.
And if I can just jump in there as well, because I completely agree with what you just said. But one thing that we've really found is that to really get that buy-in from the bankers and the business, you need to get the basics right first. You know, and Ian, you alluded to this earlier. We don't have the biggest tech stack in banking. It's quite straightforward, really, in terms of what bankers need to use on a day-to-day basis. But there is no point in me trying to roll out the latest wazzy-dazzy AI solution if bankers really what they want is a laptop that's powerful enough to run their Excel models. If they haven't got that, and we haven't got that right, they're not going to care about anything else that we layer on top. So what I would say is make sure you get the basics right first to gain that credibility, and then start layering on top of that. So get the foundational layer right first and then work on everything else after. There really is no point in looking at some of these solutions, I'm finding, if the basics aren't there in the first place.
Yeah, absolutely.
Yeah, it makes total sense. So with that, looking at time, wanting to make sure we can get through all of our hard-hitting topics here, the next section we'll be discussing is measuring ROI once you've made the purchase, and how can you set that up for success. So I'll hand it back over to Ed for this section.
Thank you. And I think that this just dovetails really nicely to what Ian and Christina had mentioned. And in the research, 55% of respondents want stricter SLAs and internal due diligence before moving to third-party software. And particularly on your comments, Christina, around investment banking being, technology light, if you will, it's difficult to get them in a room for 2 hours to really have them understand the software. So you have to do sort of small hits. And even for Williams Lea as a service provider to banks, we were always measured on very tangible SLAs. But now as companies become more sort of technology enabled, how are you measuring sort of ROI on software that you're implementing within IB?
So I'd say that I'm going to give a very deliberately woolly answer here, because it is actually very difficult to measure ROI when you're implementing software, because especially in investment banking, where there are so many other factors that could be influencing market conditions, for instance, that it's just very difficult to tally up. And of course, we are tracking, banker performance against KPIs, which they have visibility of around revenue targets, meeting intensity, and things like that. But within our team, our mantra is really that we are trying to give people as many small wins and as much time back as possible, and moving away as much as we can from inefficient processes, mundane tasks, things that we can automate, to give senior bankers, for instance, more time to spend with clients, or junior bankers more time to spend working on pitch books. So it's very difficult to actually give an ROI target in that sense, but we do see that, if we can give people time back, we are able to kind of get feedback from people and positive feedback there. But a lot of it does come down to feedback. Are bankers giving us positive feedback on the tool that they're using? Are we seeing usage stats go up for the tools that we've rolled out? Are we seeing processes become more efficient because of changes that we've made, not even to the whole process, but to parts of it? So a lot of it is anecdotal feedback. And I would say as well that sometimes no feedback is good feedback. So we had a large project last year where we had to migrate a lot of data. I expected a lot of noise. We actually didn't get that much noise. So to me, that was a positive as well. So a lot of it does come down to working closely with bankers and hearing directly from them whether it's been worth the investment or not in terms of their time, and if we've been able to give them any time back.
Time, the most valuable commodity. Ian, same question to you. Any sort of tips or tricks that you've implemented at Lazard for sort of defining ROI for sort of those more intangible metrics around time or efficiency?
Yeah, so I'm going to be as woolly as Christina, because she's right. In investment banking, it's really hard to actually measure an actual ROI. So we did this thing in technology, which means we won more mandates. We've got better fees. It's very hard to tie those two things together, right? But the measurements you have are adoption of the system, usage of the system, feedback, people asking for, oh, can we have this new feature in the system? Because if people are talking to you about a system and actually asking for things, then they're actually using it. So that's a great measure on kind of what we're asking, and that people are asking positive things. I agree that no feedback can sometimes be great feedback, but if you have no feedback and you're not seeing adoption of the system, then that's a really negative thing. But tying to actual monetary ROI is a very, very difficult thing because of all the outside factors that impact. But productivity you can measure, and we get those measures working with the staffers on kind of where they're seeing productivity gains. And we've done quite a few things around, especially junior bankers, on how can we make their life easier, how can we automate, etc.
Fantastic. Thank you both. And I'm going to turn it back over to Majhon.
All right. So that concludes all of our pre-planned sessions. And now we want to talk to our audience a little bit. So we're going to move into the Q&A portion. And we have some great questions that have come in already in our chat. So the first question here is going to go to Ian. We have a question from Emmanuel. How do you manage vendors effectively? So they've noticed that buying in software has brought challenges that they're not systematically used to dealing with compared to maintaining the software in-house. So how would you suggest handling that and structuring that? Okay,
so I'll pick on a point first that Christina made earlier around partners. So we really try to make sure anytime we are looking at a third-party solution, we have a partner. I hate vendors that will come in, try and sell you something quick and cheap, and then just disappear. You never see them again. So a lot of our solutions we use strategic partners for, and we are invested in the solution as much as they are. So we recently moved to a new CRM. We're very much in partner with that provider. That partnership means you've got good two-way communications. You've got the relationship, so when things are an issue or something's not going well, you have a channel where you can go and have the conversation. So most of our strategic partners, I've got an open line to the CEO, the COO of the company. So we've got great relationship managers who work with my team, and then there's always that additional step of escalation if needed. So having that partnership where you've got really good two-way communication, having a monthly or quarterly check-in when they can.
Oh, have we lost Ian? Ed, are you here?
Yes.
Okay, so we've just lost Ian. Yeah, okay, sounds good. All right, so we actually have a question now for Christina. Christina, you with us still?
I'm still here, yes.
Fabulous, okay. So talking about training, does the facilitated or self-paced training work better for banking in your opinion? This is coming from Orion.
So I think that facilitated but tailored facilitated training is what seems to work best. So, for example, last year we had a large rollout of a new system, and the vendor was running that training as part of the implementation. When they came in to give me the training session first, it wasn't tailored to Nomura at all. The terminology was completely different from what bankers would be used to. It wouldn't have worked at all. And I worked really closely with them to change. We really changed the whole training session, but so that it was very Nomura specific. And again, we focused on the things that I know are most relevant and most important to the bankers here. And again, between investment banks, the requirements and priorities can be completely different. So once we tailored it, it was great. When the bankers got a lot out of those sessions, they were classroom-based training sessions, kept at 30 to 45 minutes, which worked really well. But again, we just focused on the most important features, made sure it was all very relevant and no generic kind of terminology. That went really, really well. So that would be my recommendation, and what I've personally seen work really well here.
No, I appreciate that. Thank you. And, since Ian got cut off a little bit there, do you have anything to follow up on as far as the training and, the buying in and challenges and working with vendors and how you all have done that at Nomura as well?
Yeah, so I think I covered that a bit in my earlier question, but I think the main thing for me is really just making sure that there is that partnership there and making sure that, you have a good working relationship. Obviously, we have a great working relationship with UpSlide and many other vendors. I have great working relationships with all of the vendors that we work with, really, which makes my job much easier, quite frankly.
Yeah, sounds good. Okay, so another question that's come up to us is, how are you approaching generative AI? I know we've talked about this a little bit, and I know that Ian definitely gave an opinion on this. You touched on it as well, but there are a lot of people putting a lot of money in this, putting lots of investments into it. So how is that working at Nomura, and what would you recommend to others as they're thinking about 2025 planning and budgets as well?
So we have a very use case driven approach. There are lots of great solutions out there that is very easy, and I can see other people doing it. You're jumping on the bandwagon, bringing in vendors, bringing in technology, but not really focusing on kind of what you're trying to solve for. So we've got a bit of a blended approach. We have our list of use cases which are being prioritized. We're speaking to bankers, making sure we're understanding from them what their top 3 to 5 use cases in the generative AI space are. And then we're looking at what the solutions are. And that could be working with existing vendors who are bringing out AI solutions as part of, what we're already paying for, which is great. We're also partnering with some of the vendors that we work with as well to work through some of these use cases to see if, what the art of the possible is in those systems. So, for example, in our CRM, that's the approach that we're taking. But also there are some standalone solutions out there that are very investment banking specific that we're also looking to do a proof of concept with. But at the moment, and we actually do have an in-house developed solution, but at the moment it's very much testing, really trying to see if these solutions really meet our requirements. We're not really making any large decisions right now, especially because so much is still changing in the generative AI space, but we are very much testing, working with vendors, really understanding what's out there and putting together our roadmap. And as you say, it's helping us to budget and plan for really next year onwards.
Yeah, thank you for that. Ed, have you received questions?
Yes, and just sort of on the heels of that one that came through that I find really interesting for Christina, just on the topic of AI, what are the 5 top questions for an AI-enabled software provider that you would recommend?
So in terms of questions from AI provider, again, what we're looking at the moment is, and what's been very interesting for me, is because there are so many different solutions out there, my concern at the moment, being quite honest, is that you're going to have AI solutions embedded into all different tools and people aren't going to know where to go for what. So one of the solutions we've been looking at recently, which I'm particularly interested in for this reason alone, it integrates with a lot of different service providers. So it becomes more of a one-stop shop for generative AI, and it pulls data from different places, market data, your CRM, internal documents, and it becomes that one-stop shop. So when I'm talking to AI providers, a lot of my questions are around their integrations. But one of the big things for us, particularly in investment banking, is entitlements and how entitlements from these different systems can be honored. Because what I don't want to do is allow bankers to start searching everything and they start to see things that they shouldn't. That becomes a big compliance headache for me. So they're really the kind of the hot topics and things that I would discuss with those vendors.
And then just sort of, I guess, a follow-up to that, with all of these sort of newer products coming to market, or as you mentioned, existing service providers or new service providers providing new AI-enabled services, how often are you reviewing your tech stack now? Have you increased that prevalence now due to sort of the rush of AI, or just how often are you looking sort of holistically at your tech stack?
So I think, as both myself and Ian mentioned earlier, we're not too tech heavy in banking, so it makes it a lot easier than potentially on the global market side, for instance. At a minimum, we would be looking at every time we go through a renewal process, we're questioning whether or not we're getting the benefit out of this product and whether or not we need to maybe reevaluate. And, we have had instances where we've decided, we're possibly not getting enough out of this product and we've decided to move away from it. I don't think there's any shame in doing that. We've tried something, it hasn't quite worked out as well as we thought it would, or, when it's actually being used by bankers, they're not getting the benefit that we thought that we would. So I would say at a minimum, during the renewal process. But for a lot of our products, we are having quarterly business reviews and we are having, regular catch-ups with the vendor where we are reviewing product usage and feedback from the team there. So I think at a minimum, actually quarterly, we are reviewing, are we still getting value out of this product? Is there anything we need to change? Do we need to change our strategy? It might not necessarily be that we've made a bad decision and we need to move away from it, but maybe we haven't implemented it as efficiently as we could have. And again, there's no shame in saying that. You just need to, make some changes and hopefully can improve that user experience. But yeah, I would say probably quarterly for those larger products.
Thank you.
Thank you
so much. Oh my gosh, Christina, it is so hard to be at time and not get more insights from you. But hopefully everyone will follow you on LinkedIn and continue to get that feedback and knowledge drops from you. It's been so insightful. So thank you, Christina. Thank you, Ed, so much for your participation. And Ian, unfortunately, with those technical difficulties there at the end, but lots of insights from there as well. It's been hugely insightful and educational. So my main takeaways from today are that we want to ensure that ROI comes down to two things. One, understanding your business needs and your user workflows and getting the change management aspect right. So at UpSlide, we've been helping global investment banks get ROI on software investments with our in-house change management strategies, bespoke implementation process, and long-term partnership model. If you're interested in finding out more about us, the links are all below. Thank you all for joining today. Please keep an eye on your inbox, as any questions missed will be answered in the follow-up email with the recording of the webinar. And if you'd like to chat with an UpSlide team member to find out more about our services, please use the Book a Demo widget below, and someone from our team will reach out to you. Without further ado, thank you so much and have a wonderful rest of your day.